Hello students, welcome back to Sheikh Vidya Mandir online lectures. Today we are starting with a new lesson, that is accounts for non-profit concern, or known as NPO, that is non-profit organization. So in this video we shall see the introduction, the features and the receipt and payment account. There are basically two types of organizations: trading organizations or profit making organizations, and the second type is non-trading or not for profit organizations. So now there are many organizations which are basically set up for the purpose of making profit. They can be sole trading concern, they may be partnership firm, they may be a company. These organizations maintain books of accounts to find out the working results of business during a particular financial year. They prepare profit and loss and balance sheet on the basis of this trial balance. And what is the net result of the business, profit or loss? However, there are some concerns which do not have profit motive. So why are they formed? They are formed for rendering some useful service to its members or to the society at large. Can you give me example? Sports club, schools, colleges, religious organizations like temples, churches. Then you have social welfare organizations. You have charitable hospitals. So such concerns are not engaged in any trading activities. They are not formed for the purpose of making profit. So the nature of these concerns is very different from business organizations. They collect income through subscriptions, donations, government grants, etc. Now let us see the difference between profit organizations and not-for-profit organizations. So the first and the most important objective is that profit organization is formed to earn profit. That is the main objective. And NPO is formed to provide services. The second is profit organizations prepare trial balance, and NPO no trial balance is prepared. Instead, receipt and payment account is prepared. Profit organizations, what accounting statements they make? We have done that in the previous chapter: trading account, profit and loss account, and balance sheet. Whereas in case of NPO, receipt and payment account, income and expenditure account, and balance sheet is prepared. The net result of any profit organization is net profit or net loss. In case of NPO, you never say net profit or net loss. You always say surplus or deficit. Surplus means profit, deficit means loss. But this is the terminology. You're supposed to use surplus or deficit. Then in case of profit organizations, what is the owner's fund? That is owner, what he has invested, the capital plus reserves and surplus. And in case of NPO, capital fund means subscriptions, donations, the surplus that is shown by income and expenditure account. So, to sum it up, what is NPO? What is non-profit organizations? Organizations which are formed not to earn profit but to render services. Examples you know. So, the main purpose of this organization is to provide service. Let us see what are the features of NPO. First is objective. NPO is formed for promoting art, culture, education, health, charity, etc. So what is the primary motive? To provide services and not to earn profit. The second point is dividend. These organizations prohibit the payment of dividend to its members. So it is not allowed. Payment of dividend is not allowed. Third is membership. The persons who are interested in the activities of the organization become members of such organization by paying entrance fees, subscription, life membership fees, etc. Fourth point is management. The management of these organizations is done by elected representative of members. These representatives form a managing committee or a governing body. They elect a chairman who is the official head of the organization. They also elect other office bearers like secretary, treasurer, etc. Usually all these office bearers provide their services free of cost. Next is what accounts are to be prepared in case of NPO. So we have to prepare income and expenditure account, receipt and payment account, and also balance sheet at the end of the accounting year. And the last point is capital fund. capital fund is specially created by these organizations. It is made up of entrance fees, surplus, legacies, donations. We shall study all this in detail later. All this is to be added in the capital fund. Now, why do we need to maintain books of accounts? Why we need to prepare final accounts? Because anyway, these organizations are not meant to make any profit. So why do we need to maintain books of accounts? First is to maintain control of monetary transactions. You know where money is coming and how money is coming, to know the sources of incomes and expenses. So for these things, you need to maintain your books of accounts. Then is to avoid any kind of malpractice or misappropriation of cash and asset. To comply with the provisions of laws applicable. Now I'll give you an example. Suppose your NPO is registered as a charitable trust under the Mumbai Public Trust Act, or it is registered as a cooperative society, registered under Cooperative Societies Act. So it has to comply with the provisions of these acts under which it is registered. Okay. Then is to know the surplus or deficit of concern. As I told you earlier, surplus means profit, deficit means loss, but we have to use these terms. And the last is to know the net worth of the concern on any particular day. Now see, these books are generally maintained by the organizations. First is cash book, general register, members registers, register of all assets, donation register, and some specialized registers are maintained. Like if it is a school or college or university, then students register is maintained. If it is a hospital or a clinic, then patients register is maintained. Okay. Now, what accounts we have seen? NPO is also required to prepare accounts at the end of each accounting period, and they have to prepare final accounts at the end of the accounting period. And this is important, the general principles of accounting are fully applicable in the preparation of final account. That means all the rules that we have seen in case of company, the debit, credit and all, that same rules are applicable in case of NPOs. Now the final accounts of NPO comprises of what? Receipt and payment account, income and expenditure account, and balance sheet. So these three we have to learn how to make these three in this chapter. So let us see in detail about what is receipt and payment account. This account is prepared at the end of accounting year. Okay, see, all the day-to-day transactions of NPO concern are recorded in cash book, and then it is posted to ledger accounts. At the end of the accounting period, the cash book and the ledger accounts are balanced, and from these balances we prepare receipt and payment account. It is a summary of all cash and bank transactions. Okay, it is a real account, so all the receipts will be shown on the debit side and all the payments on the credit side. I hope you remember the rule of real account. Now let's see what are the features of receipt and payment account. First, it is a summary of cash book. So all the receipts are recorded on debit side, all the payments are on the credit side. Then it records all cash transactions irrespective of the period. Okay, it may relate to past year, current year or next year, but you have to record it. Includes all receipts and payments whether they are of capital nature or revenue nature. All of you know difference between capital and revenue, capital expenditure, revenue expenditure. We have done this last year. So you have to include all receipts and payments whether they are of capital nature or revenue nature. No distinction is made in the receipt or payment made in cash or through bank. No non-cash items such as depreciation, outstanding expense, accrued income, bad debts, RDD, all these things are not shown, okay, in this receipt and payment account. Basically, it's a cash book, so we don't show these things. Then it begins with opening balance of cash in hand and cash at bank or bank overdraft, as the case may be, and closes with the year-end's balance of cash in hand or cash at bank or bank overdraft. Now see, this is the format of receipt and payment account. This is how it looks. See, it starts with the opening cash balance, it ends with the closing cash balance. All revenue receipts and capital receipts are written on the debit side, and all revenue payments and capital payments are written on the credit side. So this is how you will prepare your receipt and payment account. And income and expenditure account and balance sheet we shall see in the next video. Thank you very much.